Alright, what is going on, everybody? Hope you guys have been the best of your entire life. So today I took about 4 trades and I didn't make much money, but hey, $2,600. I was expecting, to be honest, the trades that I took, I was expecting, I'll be up way more, but hey, I think my position size was small because it was Monday and I was just starting the week, and coming back from the weekend. Usually a lot of people are very hyped up for trading coming from the weekend because they hear some motivational stuff over the weekend and they're like, oh my god, let's go all in. And that has been that was one of my problems back in the day as well, where on Monday usually I'll size up because I'm so pumped up. I'm like, oh my god, let's go, and that hurt me. So now these Mondays, now from last probably couple of years, every single Monday I keep my size down so I can just close my day green, so I can use the green from this particular day as a cushion for bigger profits moving forward. Right, this is what I do, and it works out. Right now, it's just one of the best things you can do for yourself, because you know what I mean, right? Because Monday usually people are very hyped up about trading. Anyway, if you're new to the channel, my name is Sumesh, and I'm a full-time day trader. I've been day trading since 2018 or early 2019, and I've made a lot of money from trading. And the reason why I make these videos is, why not? I just do. I think of it like a journal. It's like my trading journal. 10 years later, I can come back to these videos and be like, oh my god, do you remember? You used to get excited about making $3,000 in a day. Oh my god. So anyway, let's get to it. Let me give you the strategies. Took 4 trades. Apple, that was 30%. Nvidia, that was again 30%. QQQs, that was about 160% trade. SPY, that was about 140% trade. Beautiful trades. Insane trades, right? So let's go over them. Now, the first things first. The reason why I took Apple trade, okay, I traded Apple puts right at the market open. Now, I'll give you the sauce, okay? So always you want to pay attention to the stock that is gapping up. So how do you actually, people think gapping up is when the stock's gapping up like this. No, gapping up only means when we have a gap from after hours. Like this is where the after hours market closed. In the pre-market, this is where it opened. So this right here is a gap. And this is like a $2 zone. This is a gap because it gapped up. Not other way. Like, when the price action does a gap, like let's say the price action closed here, then it opened here in the pre-market and then it went up. That's not a gap because there's nothing that actually pushed the price up overnight. For this strategy, I call this sucker strategy. And the sucker strategy is so simple, where you're trying to catch other suckers into the play. Because in trading, man, somebody have to lose money, right? So it's either you who losing money and other people making money, or you making money and other people losing money. And this is the game we're playing, right? Anyway, so when I took this trade on this Apple, the reason why I started watching this Apple trade was because of the gap up that we had overnight. This is a gap up. After hours where the market closed on last Friday, and Monday in the pre-market, this is a gap up. And now people are like, oh, but I don't like, people go, I don't like to watch pre-market action. Why not? There's money to be made. Why do you have a opinion about stuff when you do not know how to make money? Just stay open to the whole thing, right? I just never understood. Anyway, so there was a gap up. Now I know that there's a gap up, and the strategy simply says like this. It simply goes like this. When there is a gap up, like this is where they closed and this is where it opened. When there's a gap up, there's a lot of suckers into the market. Like this is a gap. There's a lot of suckers into the market who think like the price is going to keep on pushing up, right? And we just before the market opened, like 9:30, just before the market opened, 929.58, couple seconds before the market opened, you look at where's the pre-market high. Okay, this is where the pre-market high is, right? And then when the stock breaks the pre-market high, a lot of people who do not know how to trade, they go long the moment the pre-market high breaks. They straight away go long. But I mean, think about this. Think about this logically, okay? So if you are somebody who held trade overnight, let's say you bought it at 202, and overnight by the time it actually opened, it's trading at 208, and you had 10,000 shares, for example, right? There's big money out there who can afford this. 10,000 times $6 is a gap up. $60,000 you made without doing anything. Think about this. Is that not like you didn't do anything? You just held the trade overnight and you woke up and you're up 60,000. Why wouldn't you take profits? Now, for him to get out of this big position size, he needs other people to sell their shares. He needs other people to buy their shares from him, right? Think about it, because he is long. So when you're long, you have plus 10,000 shares. Now he needs to sell. Like if you need to sell your iPhone, what happens? there has to be somebody who's willing to buy it from you. That's how you can sell it, right? Now, if you are in a remote town and there's like 10 iPhones on sale already, right? And there's nobody who actually can buy because the population is fucking 11 people, right? So there's very less chances that you're gonna sell the phone here. So what do? You're like, okay, let me come to a bigger city where the population is 2.5 million people, for example, and I want to sell my phone. Where do you think out of these two scenarios you're gonna sell the phone easy? Where there are a lot of buyers, right? If the other people are looking to buy your phone, that's where you're gonna have an easy, sale of your phone, right? Same thing goes in the market as well. All these people who held their trades from overnight, they have to sell their phone. They have to sell their shares. And where can they sell? Where there's a lot of buyers already, so they can sell. Now, where do the buyers come in? Buyers come in, all these people, retail stock traders who do not know how to trade, they go long the moment the pre-market high breaks. They're like, oh my God, pre-market high broke, let me go long. Oh my God, there's a strategy that they use, right? So they go long the moment the pre-market high breaks. Now, you're like, okay, but that's all cool. But the moment it breaks, all these people just dump their shares on them. They're like, fuck you. There you go. They just dump their shares on them. What happens? Because the buyers are not so strong, because it's a retail trader. Retail trader can't afford 10,000. He probably is buying 10 shares. You're probably buying 100 shares. And this is not just one person. There's about 1 million people like that who want to sell their shares like this, right? So what happens is, all of a sudden, the moment the pre-market high breaks, all of a sudden it starts getting the selling pressure. So now, what's the strategy? The strategy says, let it break, no problem. The selling pressure will push the price. If it does, if it pushes the price below the pre-market high right here, the moment the price comes, don't wait for no candle close. This is where you can buy puts. Because why? All these people started selling, the selling pressure came, and these people are not actually too many because retail traders can't afford too much, and the price can dump. You see what I'm saying? Price can dump because there's so much selling pressure. But now, if you are going short here, or if you're buying puts here, where would your stop loss be? Stop loss be just on the other side, just high of the day. This is the stop loss, but where's your profit target? Profit down. This is an advanced strategy. Profit targets usually about, and please, this is advanced strategy, I'm telling you. Profit targets about like 200 moving average or profit. There's no actual solid profit target. You just have to be like, okay, I'm okay with, like, okay, if you're risking $1, you're like, okay, this already made a $2 move, sweet, I'm getting out. Because this is not actually a rule of thumb where you're gonna get out, because this is advanced strategy. That makes sense? This is called sucker strategy. Hope that makes sense. Gap up, let it break the pre-market high. All the people who actually held the trade overnight, they want to sell, and they want to sell where a lot of more buyers are, and the price can go down. All right, so let's look at what happened here. Where's the pre-market high? Look at this. Let me replay. Market about to open. This is 926. This is 928. Market opens at 930. This is pre-market high level right here. So let me mark it on the charts. This is the pre-market high level right here. All right. And as soon as the next market candle opened, it did this. A little, like, not heavy move, a little move like this, right? And that's when exactly. Now, this is not a significant move. What you want to see always is let it break. You want to give the sellers some time to actually come in. You see what I'm saying? Like, it's not like once it broke 1 cent. No, you want to give sellers some time. Give it 10, 15 cents, no problem. Let it hold for a minute. Then when I hold for a minute, that's when a lot of people are like, oh my God, this is going to go. It broke the pre-market high and it's holding. And that's where the sellers come in. This is advanced strategy, as I said. That's where sellers come in. So the moment it breaks below the pre-market low in this particular candle, I bought put stop loss right here, right? So I'm risking this. Now, because it's advanced strategy, we do not know where we're going to get out, right? So the only way to tell is what's a risk to reward. Okay, if I'm risking this, what can be my reward? I want at least 2 to 1. I want at least 2 to 1. If I'm risking 60 cents, I want at least $1.20 as a reward, right? So this is how it went. It came down, boom. And I sold a little bit here. Then I started selling the moment it touched 200 simple moving average right here. The moment it touched this. Now look at this move, bro. I mean, 60 cents to potentially make $2.50. That's that means you're risking $1 to make $4. That's insane trade, right? And this is advanced strategy, as I said. And people will not tell you this strategy, and they'll charge you hundreds and hundreds and hundreds of fucking dollars, or thousands and thousands of dollars to teach you this, and they still can't break it the way I can break it down, because I understand the concept, right? And this is how you take a trade. Pretty much that simple. And this 200 simple moving average is a setting. Let me show you the settings of this 200 moving average, so you can do the same as well. Why the heck I can't click? All right, here you go. Moving average 200. This is the color that I use. All right. Now, another thing. Why am I on a 2-minute chart? Might be a good question. Not that you asked, because you think this is entertainment. This is not entertainment, all right? I'm telling you how to get rich. Don't think of entertainment. Go take your pen and paper and fucking take notes. God damn. All right. So the time frames that I use is, all right, for time frames, I do not use one time frame whole day. I use 2-minute chart from 9:30 Eastern time to 10 a.m. Eastern time. All right, I stick on 2-minute charts. I use 5-minute charts from 10 a.m. to 11 a.m. Eastern time, New York time. Then I use 10-minute chart for 11 a.m. to the rest of the day, pretty much. All right, these are time frames that I use. The moment 10 o'clock hits, I'm gonna jump on a 5-minute chart. Okay, this is a trade, beautiful trade, and that is my Apple trade. Now let's talk about NVIDIA trade. Okay, I'll show you how to use Fibonacci's to catch trades, because this trade was taken before 10 o'clock, so I was still on 2-minute chart. And what I'll do is I'll just go and do the replay feature. Okay, here we go. And again, remember the strategy that I just broke down on Apple? Same strategy worked out on SPY as well. I missed this. It works out on every single name, SPY gapped up. Look at this. This is the actual gap. Where's the pre-market high? This is the pre-market high. Look at this. This is the pre-market high right here. What happened? The moment let it break, the moment it failed, it made such a huge move. Look at this. It went down from 502.5 all the way down to 501.5. And if you were thinking about, say, shorting this, I missed it. I was not watching it out. Then I'm like, oh my God, I missed this. This is a risk. And based off this risk, if you're risking 30 cents, 60 cents reward will be nice. But it went down this much. This works, The strategy just simply works. This is what I'm trying to say. I'm not giving you anything that will not work. I want you to go out there and make money. All right. So anyway, I didn't take this SPY trade. Now let's get back to NVIDIA trade. All right. NVIDIA trade before 10 o'clock. So I was still watching the 2-minute chart. And this is what happened. All right. So I was not watching it right now. I want to watch when the stock's trending. If a stock starts trending, that's what I want to watch. And then it started trending a little bit. Sweet, gave me a pullback. Now this is a trend. Like visually, you can see this is a trend. See what I'm saying? It tried to go up, got rejected, and it made a move from 131.5 almost down to 129.5. That's a $2 move down in a matter of like 3 minutes or 6 minutes actually. And then what I do is Fibonacci's. So how do you use Fibonacci's? When a stock is trending, man, you want to drop your Fibonacci's from like this. You want to literally... you want to have your Fibonacci's, take your Fibonacci's, and if you're watching the Fibonacci's for the downside, you want to place it from the up to down, where it starts pulling back. So from here, it will give you some levels on your charts, and you trade those levels, okay? So what happened was I dropped my Fibonacci's right here, and please don't get confused where like, oh, is it from top to bottom? Bro, you can go from bottom to top. It doesn't matter. The numbers will still stay the same. Like, look, these numbers are almost the same. Everything will still stay the same. It's not like which numbers to watch. It's just like first couple lines are important. That's all you need to know. Okay, first 2 lines after the pullback are important. All right, doesn't matter which one. Doesn't matter which one. All right, you can draw any way you want it. All right, now this trade, it pulled back. Like it started bouncing and it pulled back towards the Fibonacci's, and it's holding. I personally like when it holds 0.236 and 0.382. And these are my settings, by the way, right? Take a screenshot. You can set it up as well. These are my settings, and I do not like full settings, all right? I do not like any like fancy colors. I just have like plain colors. That's what I like, all right? Anyway, now I saw this and I'm like, okay, if it breaks below the Fibonacci level again, because this is a strong, this area is 0.236 and 0.382, usually are very, very strong, okay? So price bounced a little bit. It bounced and it couldn't break this 0.382. So I'm like, okay, let's see. If it can break below this particular area, I'll go short, I'll buy puts with a stop loss right above this green candle right here. Or you can say next Fibonacci level, whatever, right? Okay, I'm risking this. Wait, where's my reward? The reward simply for this strategy, or simply is like next hourly levels that I'm watching. If I'm watching next hourly levels, be it if you have any sort of levels which is coming next. I don't know how you draw levels. I draw levels on an hourly chart, and these yellow lines are hourly chart. I draw them myself. All right. So now Nvidia, this is a trade. Next candle, if it breaks below this, simple trade. What's the strategy here? The strategy is super simple. First, let it trend set up. What's second? The time frame, 2-minute chart. All right, time frames. Third, Fibonacci's. All right, let the Fibonacci candle close, and if it fails this, you go. All right, fourth, close pullback. So the pullback candle, let the pullback candle close, and fifth, continuation. You buy at the continuation when the stock actually started continuing. So trend is there, time frame's good, Fibonacci is good, close pullback happened, and now it started continuing towards the downside. That's when you want to buy, right? And this is how the trade went. It broke below, we jumped in, and this was again 30% trade. And this is the profit target that I'm watching, and this is how it went. Pretty insane, right? Pretty insane. I know, I know, man. It went down even further, a little further down as well. But this was a trade, and we started taking some profits here. And when it started bouncing a little bit, we're like, all right, you know what? We already took some profits, no problem. We'll get out, and we'll come back to this later if it's set up. But this is a 30% trade. Beautiful trade, right? So we entered at 130, got out 128.7. So based on the risk to reward, now you might be like, oh, what's a risk to reward? Risk to reward, super simple. Look at this. You're risking about 25 cents for a reward that is $1.25. That means every dollar you risked makes you about $5. Beautiful trade, isn't it? All right. Now, if you're like, oh my God, yeah, it's so easy to just say that I took a trade here, I took a trade here, I took a trade here. No, man, I do not bullshit. That's not me. Okay. That is just not me. I don't like to, play around too much. Look at this, man. Come on, bro. Why wouldn't it? We are traders, man. We don't have that much patience. All right. All right. So this is my chat. Okay. This is my chat. Yeah, $34 loss. Sweet. I'm just showing you. I'm not showing the best bits. It's just what it is. LT pay 7%, 214, 700, 558, 195, 221, 445, 285, 4%, 236, 89, 149. You do the numbers, and this is not halfway there. $5,000 for 47. Best 1 month KCU 202, 1200, 141, 828, 381, 112, 146, 102, 2400, 2700. These are all my students, yo. Up 6% of the account. This is, I don't know what the number is. But sweet. 192, 201. Thanks for KCU for teaching me everything. 1225. KCU is K Capital University, alright. 931. 82,000, first 1,000 for the day. Let's fucking go. 14 days KCU, don't do red, 12 green. They can watch my actual screens while I'm trading live, so it's insane. It's easier for them, right? Nate, like, all I'm saying is, I'm not saying, oh, join this. I'm not saying join. Like, that's on you, bro. Whatever you want to do, I can't. All right. All I'm saying is, these are not the trades that I'm just like making it up after the fact. These are the trades in the real time that I took with my students, right? All right. So this is done. Next trade that I took was on Key. All right, this trade happened on a 5-minute chart. So we'll jump to a 5-minute chart because it happened after 10 o'clock. Now let's have a look what is happening here. Let's go and let me give you the strategy. All right, so I took this trade roughly around here. All right, let's see. First things first, pre-market high. Like, remember the strategy that I was giving you for Apple? Look at this. It works on this as well, but there's no gap up. That's why we never actually even looked at it. Look at this. There's no gap up. Opened here, it pushed up. That's not actual gap up. But it worked, but sweet. Anyway, pre-market high level is right here. Okay. Early in the morning, you got rejected, and after 10 o'clock now, when we were watching 5-minute chart, it broke the pre-market high. Sweet. And then it started forming a beautiful flag right here. Yo, look at this. It broke the pre-market high. It started forming a beautiful flag, and I'm like, oh my God, this looks insane. Don't look at this move yet. All right, we caught this whole move towards the upside. Don't look at this like move, but all I want you to look at is strategy here is super simple. Let a critical level break, and then when it gives you a little pullback, you want to look for like a flag pattern, and that's when you can go long. Now it doesn't have to go back and retest. It can be literally breaking here, giving a pullback like this, and going, or it can be breaking, retest, and play around and go, or it can be break and playing up like this on the level up and down, but then this is go. Okay, all I'm saying is this. So now what happened is I saw this happen and I'm like, oh my god, this looks good. The moment the previous high of the candle break, I can go long. So this is the previous high, never broke, never broke, never broke. Then this candle actually broke. The previous high of the candle broke. We went long. Where's the stop loss now? Our original profit target because we are watching for the break of the this black candle. This is the stop loss that we have. Our original profit target was just at this yellow line, the first yellow line. So we're risking about 50 cents to potentially make 92 cents. Like the risk to reward is nice, right? We took this trade, 0 days to expiration contracts. Contracts started paying. Now what happened? Remember what I just explained before, a critical level break and it starts doing this. And that's when you can go long as well. Like on the level, this is exactly what happened. Look at this. It broke. On the level, it started making these wicks. What happened? The moment it breaks, it went. The moment it breaks, it went. So now we have a trade that we are holding from the morning, right? This is where we entered. We have a trade that we are holding from the morning, right here. Stop loss. Now it's this reward. Now then it pushed up to the next yellow line. Bro, think about this. Every $1 that we risked, we made about $5.50 back. This is actually 160% trade, right? And now you're like, but how do you know you're going to get rejected there? We don't. We kept taking profits every time it hits the yellow line. You keep taking profits. And the moment we have such a scary candle, bro, we have already taken like big chunk off already. This is not a little move. This move went from 498, broke all the way up to 501. Think about it, right? It's not like it made a little move. It still made a big, decent move. But every time it hits the yellow line, we kept taking profits. And if you're like, oh bro, how do you draw these yellow lines? That's a secret. Right? Not actually a secret. You just go on an hourly level and you draw literally, it's so simple. Or I make YouTube videos on this as well, but it's super simple where you go on hourly levels. Man, taking too bloody long. You go on hourly levels and you draw your levels like this. Look at this. Last time I had a hard time here, so we drew that. Last time I had a hard 500 is just a 500. Then I had a hard time here. We drew that. This is how you draw levels. Literally, there's no fancy way, but there's some hacks that we use. But yeah, it's a secret. All right, I can give you everything. I don't care. Go out there and make money. All right. All right. So this is a beautiful move and it worked insane, right? And then when it started selling off, we had like a few contracts running still and we're like, oh my god, we were up 150, now we're only up 70. Let's just get out, no problem. Beautiful. 70% still for the runners, but big chunk was taken off. All right. Now then at the same time around here, we took SPY trade as well. Same time, a little bit on SPY, a little bit on QQQs. SPY trade is this. Look at this. Roughly around here, what happened was I started seeing a little trend line forming at the top. Alright, super simple, nothing fancy, nothing fancy. I started seeing I actually entered right here. The moment it broke, I started seeing this. Why did I actually even started looking? Because I started looking at this because this is a pre-market high level right here. And earlier in the day, yes, it got rejected off the pre-market high. Sweet. But this is a pre-market high and it broke the critical level and it started, what did I say? Break the critical level and started doing this. But you want to look at the flag. The moment the flag breaks, that's when you can go long with a stop loss just below these pullbacks. That's what I was watching. I'm like, okay, it's trying to break a critical level, which is a pre-market high level, and it's doing this. Like similar to QQQs, but QQQs is actually on top of the level. Sweet. And there's a trend line running and there's a flag. You know what? I'll go long the moment the highs of the previous candle break. I went long the moment the highs of the previous candle broke with a profit target every this yellow line that we have on the charts, right? This is how I went. Same thing we did on Qs. We kept taking profits as it went up towards the yellow lines. And the moment it started making a massive pullback, that's when we were like, uh-oh, we out. Done. Okay, super simple. Trading doesn't have to be hard. And this was like about 140% returns because it made a decent move, yo. Now, people make trading too difficult. People make trading too complicated. Trading doesn't have to be complicated. Trading just have to be you sticking to your systems. You sticking to your plans. You sticking to your strategies. And that's trading. And I'm giving you my strategies. You see what I'm saying? Now, there's a reason why I make these videos. The reason is super simple. I want you to do well with my free content. I want you to go out there and make money from my free content so you can use these strategies in the real time and you can start making money from your trading. And then If you want to level up, you can join us inside my university, where I actually give you everything at one spot, at one place. And I'm like, bro, this is what we're going to do. And I keep you accountable. I teach you the strategies, keep you accountable, and I push you towards that one common goal. And if we found out that you have a problem with this one thing, we'll fix that problem so you can even get to the next level even faster. That's the university. Okay, so that's what I do, and go make money with my free content. And if you like making money with my free content, and you're like, oh my god, this is so insane, how can I join? To join, there's a link, first link in the description box below. It's just for the application link. We do not have a link where you're like, oh, let's go buy. We don't do that as application form, because you'll be I'll be surrounded by these people the whole time, right? I'll be around them the whole time, and I want only the winners. I don't want the people who have like a shitty mindset around me. So I go over the questions, you apply, takes you 5 minutes, 3 minutes, whatever. I go over the stuff. If I think I can help you out, I send you email or we have a conversation. Otherwise, goodbye, see you later. Please let me know in the comments down below if these strategies made sense. And also, I don't know how the algorithm works on YouTube. Just drop a like, subscribe. I mean, it can't hurt you. If you found any value, subscribe to the fucking channel. Why not? And like the video, comment. Let me know if these strategies make sense and what other videos you want to see from me. And that's it. All right. You have fun. I'm out. Peace. Goodbye.